All right, let's get into it. Today we're doing a deep dive into TKO Group Holdings, Inc. You know, the entity bringing together some really huge names in sports and entertainment. You've shared their latest financial filings, recent announcements, and well, our goal today is to kind of cut through the corporate speak, pinpoint those crucial insights, and give you, our listener, a crystal clear understanding of what's been happening, and importantly, why it matters to how we all experience live sports and entertainment. We'll uncover how TKO is navigating this incredibly dynamic landscape.
Exactly. And TKO, at its foundation, it's a premium sports and entertainment company, a real titan formed back in September 2023. That was through
But this story, it really kicked into reg gear just a few months ago, right? February 28, 2025. That's when they made a truly significant move, bringing IMG, On Location, and Professional Bull Riders PBR into the fold, all acquired from Endeavor Group Holdings, Inc., which, just for context, is a major parent company here. That's a huge investment, over, $3.25 billion. Given TKO already had UFC and WWE, these powerhouses, how critical was adding these? Was it defensive, like controlling the ecosystem, or purely offensive, finding totally new revenue streams?
That's a really crucial question. The acquisition, approximately $3.25 billion, plus there was another $50 million purchase price adjustment. What's really critical to understand here is that this was treated as a common control acquisition. So essentially, Endeavor already had control over TKO and these businesses they bought. So for the financial reporting side, TKO's statements have been retrospectively recast, which basically means that they've gone back and restated the numbers for prior periods as if these companies were always together under common ownership.
It gives a much, much clearer historical picture of how the combined entity's been performing.
Okay. That retrospective recasting, that makes comparing things much easier. And the strategic...
Precisely. I mean, think about it. UFC and WWE, they already draw millions of passionate fans, huge fan bases. But by bringing in IMG, a global leader in sports, events, media, and especially On Location, TKO isn't just selling you a ticket to a fight or a show anymore. They're now positioned to own, well, the entire fan journey, run these huge events. This could mean premium hospitality packages, maybe bespoke travel arrangements, exclusive merchandise, even unique post-event experiences, perhaps.
This isn't just diversification. It's really about maximizing the revenue per fan by embedding themselves deeply in every aspect of that experience economy, turning spectators into...
Okay, so beyond the high-level strategy, the ambitious mergers, the real measure is the financials, right? And when we dive into their latest quarterly report, the numbers tell a remarkably compelling story. Growth, efficiency. For the second quarter ended June 30, 2025, their overall revenue jumped by a solid 10%, hit $1.308 billion, up from $1.193 billion same time last year.
And that's just the top line. You look at net income, it saw a truly significant leap, reaching $273.1 million. That's way up from $46.2 million in Q2 2024. But perhaps, most impressive for operational performance. Adjusted EBITDA, it soared by 75% to $526.5 million, up from $300.8 million. And that pushed their adjusted EBITDA margin from 25%.
Wow!
All the way up to an impressive 40%. This signals not just growth, but remarkable improvement in operational efficiency and profitability.
Those overall numbers are certainly compelling, that leap in adjusted EBITDA especially. But sometimes those headline figures can mask, underlying challenges or maybe one-offs. As we dig into the segment-by-segment performance, what should listeners look for? Sustainable growth versus, say, a temporary boost. Let's start with UFC.
That's a critical distinction, absolutely. For UFC, revenue was up 5% to $415.9 million. The key drivers here look pretty sustainable. $24.1 million boost from partnerships, think new sponsors, renewals, and $9.9 million more from media rights, just due to contractual increases. Now, there was a partial offset from slightly lower live event revenue, but that was mainly due to the timing of some international events. You know how that can shift quarter to quarter, doesn't really signal a decline. So overall, yeah, strong organic growth drivers there.
Okay, makes sense. And then there's WWE. Seems like they had a really standout quarter.
WWE truly soared. Revenue up 22% to $556.2 million. Huge. Here the growth was, well, a mix. Both event-driven and strategic. They saw a significant $41.6 million higher live event revenue, largely fueled by blockbusters like WrestleMania 41 in Vegas, Night of Champions in Riyadh, massive events. Partnerships also brought in an additional $33.6 million. But a major structural boost was the $18.2 million jump in media rights revenue. This was notably driven by their
New global content distribution agreement with Netflix. That kicked in January 2025, and also the expansion of SmackDown programming. Even consumer products licensing added a healthy $6.7 million. That Netflix... Yeah, the decrease in IMG's revenue is primarily due to a $13.5 million reduction in media rights. Basically, they no longer hold the FA Cup rights. That was a notable contract expiration. However, they've been strategically offsetting this. They're securing new production agreements, like with the Saudi Pro League, which is, frankly, an intelligent move, diversifying their media rights portfolio beyond just traditional football.
Gotcha. And then we have the corporate and other segment. Includes PBR now. That's a modest 9% increase in revenue.
Yes, that was mainly from higher management fees for their boxing-related equity investments. It's also worth noting overall direct operating costs actually decreased across the board. Part of that was due to factors like a prior year write-down of unsold tickets for the 2024 Paris Olympics within the IMG segment. So it shows a cleaner balance sheet this year, which is good.
That is a good sign, financial discipline. And looking ahead, TKO has actually raised its full year 2025 guidance, projecting revenue now between $4.630 billion and $4.690 billion, and adjusted EBITDA between $1.540 billion and $1.560 billion. What does this raised guidance signal to the market, to us? The confidence level must be high.
Oh, absolutely. It signals strong management confidence in their future performance, their operational leverage. Raising guidance
Mid-year, especially for a company of TKO scale, it typically indicates that internal projections are beating expectations, or maybe strategic initiatives are delivering results faster than they thought.
Licensing deal, is it? What does this mean for the future of live sports distribution? And for you, the viewer?
No, it's absolutely a major shift. It signals how traditional media giants like ESPN are adapting to a streaming-first world, you know. For the viewer, well, it simplifies access to WWE content. It could potentially bring in new audiences through ESPN's huge reach, while also giving existing fans a kind of centralized hub for those premium events. It's a bold step into the evolving digital landscape. Really indicates a long-term commitment to direct-to-consumer models.
Yeah, definitely shows a strong belief in that subscription model. And
In terms of returning value to shareholders, TKO's board authorized a pretty significant $2.0 billion share repurchase program, Class A common stock. And on top of that, they approved a quarterly...
Yeah, these capital return programs are a strong signal to investors. Demonstrates the company's financial health, management's commitment to shareholder value. It really complements the growth narrative they're pushing.
Now, here's something truly unique. That talent agreement that caught my eye. The deal with Dwayne "The Rock" Johnson. He was appointed to TKO's board back in January 2024, notable on its own. But then there's this intellectual property assignment agreement. WWE assigned The Rock trademark and related IP directly to Mr. Johnson himself. And he then licensed it back to WWE for up to 10 years. As payment, basically, for his services in these IP grants, he got a restricted stock unit award valued at $30 million. This feels different, almost unprecedented. What does this structure tell us about how things are changing between big entertainment companies and their top-tier talent, especially talent with huge personal brands like his?
Oh, this deal it's genuinely fascinating. It's like a blueprint for how major entertainment companies might approach their most valuable talent now. It acknowledges that for global superstars like Dwayne Johnson, their personal brand, their IP, can be as valuable, maybe even more valuable, than the characters they play. By assigning him the trademark, TKO is, well, deeply incentivizing him, making him a direct owner, a partner in his own brand, while still securing a long-term licensing agreement for their use.
Right.
It's a really symbiotic relationship. It aligns incentives perfectly, offers a pathway for talent to build significant generational wealth through their own IP. It could absolutely become a model for future high-profile entertainment contracts.
That really does redefine the traditional talent company dynamic. And just quickly on leadership evolution, we also saw that amendment to CFO Andrew Schleimer's employment agreement, allowing him to also serve as CFO of Endeavor Group Holdings or in other related roles within the EDR group, without affecting his TKO compensation, which is interesting.
Absolutely. Leveraging top talent across their various entities, it clearly optimizes their overall operational efficiency. But, as any rapidly expanding company knows, growth often brings with it a complex legal landscape, and TKO is certainly no stranger to this.
Indeed. Which brings us to a crucial area risk, resolution of significant legal cases they've been navigating. Starting with the antitrust challenges on the UFC side, they settled that major class action lawsuit. Lesper Alvi Zufa, LLC, agreed to pay $375.0 million in installments. That got final approval and was fully paid by June 2025.
That was a major settlement, yes. But it's important for listeners to know there are still ongoing similar lawsuits. For example, Johnson et al. v. Zufa, LLC, also Sirknos v. Zufa, LLC, which notably also challenges arbitration clauses and seeks treble damages, so higher stakes there potentially, and Davis v. Zufa, LLC. That one focuses specifically on non-UFC fighters and injunctive relief. We want to be really clear. These are allegations at this stage. TKO is either in the discovery phase for these cases,
or has filed motions to dismiss them. We're simply conveying the reported claims from the source material we reviewed.
Absolutely. Just reporting the facts as presented in the filings. Okay, on the
That's right. Additionally, there are ongoing civil lawsuits involving Mr. McMahon and others, including allegations of sexual assault. And there's a separate class action filed by former WWE stockholders related to the TKO transactions, the merger itself. Now, for that particular stockholder class action, WWE, TKO, and Endeavor Group Holdings are actually no longer defendants in the consolidated action. But discovery is underway involving the individual defendants named.
Okay. And finally, a look at IMG's European dispute. Legal proceedings in Italy, stemming from an Italian competition authority investigation, alleged anti-competitive practices related to Serie A and Serie B football media rights. IMG got fined, EUR 0.3 million back in 2019 for this?
Yes, a relatively small fine initially. But here's where it gets potentially quite significant. The government civil lawsuits brought by football clubs and leagues are seeking damages that total in the billions of euros. Huge potential numbers. However, and this is the crucial part for TKO Endeavor Group Holdings, Inc., has contractually agreed to indemnify TKO, meaning Endeavor will pay any judgment or settlement related to these specific Italian claims. This provides a really substantial financial safety net for TKO regarding this particular
Legal exposure. It effectively shields them from what could otherwise be a massive liability.
We've covered a lot of ground today, haven't we? From TKO's, aggressive strategic growth through these
It's a lot to digest, I think. If we connect it to the bigger picture, TKO isn't just combining existing assets. That's too simple. It's aggressively, actively reshaping its market position in this really dynamic sports and entertainment industry. The surprising twist for me, perhaps, is how they're simultaneously pursuing that aggressive external growth, while also optimizing internal operations for profitability. That EBITDA jump shows that. And strategically managing a complex legal landscape, all while clearly prioritizing shareholder returns with the buybacks and dividends. It's a multifaceted playbook. It suggests they aim to be
Not just a leader, but maybe the dominant force across the entire live entertainment value chain.
That's a strong point. Okay, here's a final provocative thought for you, our listener, to mull over. How will TKO's aggressive expansion into these newer verticals like hospitality, production, that whole experience economy push, combined with its strong capital return program and these ongoing legal challenges, how will all that influence its long-term strategy for really dominating the global live entertainment landscape? And, maybe more intriguingly, what surprising new partnerships might we see emerge from this evolving giant as they keep refining their approach?